Hey traders, checking into the stock market today. Bears had their day today with lots of red out there, specifically in some sectors, while others held up well. We'll see where we stand heading into the CPI numbers tomorrow and whether or not this is the start of weekly consolidation. So thanks everybody who tuned in to our public live stream this morning as we went over the pre-market and the stock market open, and we were looking for the bears to take some control, and they did. So it didn't get an all-out dump kind of day, and that was because some of our sectors held on well. This was the S&P 500 4-hour rising wedge from yesterday. So it did break bear, but a simple statement on the S&P 500 is if we do not lose these little higher lows on the daily from the last few periods of brief consolidation, the bulls keep absolute control. So yes, we've got some consolidation. Yes, we're slowing down, seeing some signs of some bulls tiring. CPI numbers tomorrow are either going to break this support of 409.60 and shape up that weekly consolidation, or if it's a bull reaction, we're going to hold it and the bulls are going to keep their complete control. So watching very closely what that reaction is going to be. And again, watching very closely for whether money is leaving the market or rotating around. Today we came fairly close at one point in the day where all of our major sectors were near their lows. Half of them were at the lows and half of them were approaching, but we didn't quite get there. And we saw sectors bounce and hold their lows, most notably the financial sector. We could see through the morning that the financial sector was the lead team bull and IWM and QQQ were the lead team bear. And we know that our most clear trending days, when everything's going in the same direction, is when all of our sectors are going in the same direction. So there's definitely tug of war going on today. We can look at the NASDAQ here and see the daily consolidation underway. And we did break some short-term support. We've now got daily EMA 12 as a level. And we're also looking at 311.84 as a price level as well. So the NASDAQ is a bit weaker. And again, that is due to the semiconductors being weaker with a couple news events the last couple days. But QQQ divided by SPY here shows us that it is still leading the way to the downside during this consolidation. And if you told me that the NASDAQ was weaker than the S&P 500 the last 3 trading days, but that SPY would still be holding little daily higher lows, I'd be surprised. So that's a good job by the SPY bulls. I personally am not comfortable being long here for anything more than short-term trades. I will be more comfortable looking for weekly higher lows for long swing entries, but keeping an eye out for bearish swing entries for weekly consolidation, but really not sure what we're going to get the next couple days. So I am not married to one direction or the other. I just know that I won't be aggressively going bullish up at these levels. I will go bullish, but again, short-term mindset. Pretty much just sticking to day trading bullish, not swing trading. SMH, so big drop today, big bear volume. There was more news, guidance, and I honestly don't even know exactly what the news was, but a company is saying something bad. That's all you need to know. So SMH daily is still in an uptrend, anything above 221.30, but it has pulled back from its high fairly notably, and a lot of bear follow through from this stair-step pattern. We had a higher low every single day for 7 days in a row, and that pattern was lost at 241.84, and we pulled back very notably from there. So that was a nice signal. Lost the stair step and then pretty much double topped at that resistance level by 20 cents. So this will be a potential head and shoulders type pattern, which is again just going from an uptrend to a downtrend, which is higher low, higher high. If we hold a higher low, lower high, lower low. So that's something we'll be keeping an eye out for, and it's due to the size of this retracement that we're watching for that to potentially be a pattern. Keeping in mind that we have already started weekly consolidation here, losing the stair-step pattern. Again, bigger picture, we're watching for the potential of this inverse head and shoulders, but the daily trend is our guide. We can look at this and say weekly consolidation is underway. If we're going to see follow through for the bears on this weekly consolidation, we must confirm a daily downtrend. We must set that lower high and lower low. We're going to be watching our retracement size on this consolidation to help us determine probabilities. Is it a bull flag on the weekly? At the moment, that's still possible. Do we pull back 50% plus on that retracement, further distancing ourselves from the weekly trend change? Do we pull back 65%, which would be a big red flag for the bulls, in my opinion? Bulls can't give back more than 50% on these retracements if they're going to be looking for weekly trend changes to be on the table. And so same thing for SPY. We haven't started weekly consolidation, but once we do, we're watching the retracement size. Can't be more than 50%, which currently is at about 390, which means we could pull back about 5%, 6%, and still be holding the 50% retracement. So there are often times, I look at this chart right now, and the reason I'm looking bearish, there are times where I'll see a technical setup and say, it can't be that obvious. Everybody's looking at that. And I have to remind myself, no, not everybody is a technical trader. In fact, probably the minority of market participants are. And so I see a setup like this showing bulls tiring right into weekly resistance. And it's the kind of move where in hindsight, duh, of course we pull back from there. So I'm keeping that in mind as well, because there are certain times where I overthink things a little bit too much, right? We'll see a clear pattern, but sometimes I won't trust it because of how clear and obvious it is. Not this time around. So definitely still watching the bears. So Tesla followed through for the bears today. We had some bearish news come out in the middle of the day. A tweet about self-driving, hitting kids, whatever it was, from a competitor, but it did impact price. And we knocked off from the hourly bounce being underway. Did defend the low of the day, but definitely added some weakness. Keeping an eye out for first hourly oversold conditions. And actually, we already got there today. We already got there, what's that, Friday? So I take that back. We already got hourly oversold. So at this point, same thing as SMH, really. We're watching this last support level back here of 768. Is this a big enough pullback to scout a daily lower high to be the result of the next time we bounce? The weekly consolidation is underway here as well. We're scouting a weekly higher low. We're watching our retracement size, etc. XLV didn't do much today. Pretty much a daily inside bar. We broke the low of yesterday by 4 pennies. We rejected from the high of yesterday by 7 pennies. Pretty much the same daily candle, just a little bit weaker of a close. But as I was watching our team bull, team bear sectors when we started the morning, XLV never really picked a side. And that happens often where XLV is just in the middle and doesn't really have a clear side. So when XLV is convincingly on team bull or on team bear, I pay attention to it a little bit more. But the last 2 days, that has not been the case. So still fairly range bound here on the daily for XLV, and just watching to see how is this inside bar from last week going to break. Financial sector still strong. Daily inside bar today, little higher lows maintaining, and the strength in the financial sector today had me not expecting a lot of downside in the S&P 500, unless XLF rolled over and joined Team Bear, which it was close to doing a couple times today, and I shorted it on this 5-minute lower high due to the size of this drop. Shorted it on the 5-minute lower high in case we did join Team Bear and break to a new low of the day. But it was just boring, tightening up, stop out. We did eventually hit a new low of the day, but only by a couple pennies. Fortunately, wasn't feeling very much FOMO because we went right back up. So in the end, financial sector did not join Team Bear enough for SPY to see a whole bunch of weakness. At the end of the day today, SPY was down significantly less than QQQ. And again, it's that semiconductor factor that has helped QQQ bears lead to the downside the last couple of days. IWM, daily consolidation clearly underway. This was one of our weakest sectors today as growth names took a solid hit. Pretty much growth and tech made up the majority of red on my screen. So the biotech sector had weakness we'll look at in just a moment. Higher low, 187.17 is a key short-term level for me, because if we lose that level, we're also going to lose daily EMA 12. And we've been holding that EMA 12 for the last almost 3 weeks of trading here. So bulls are still keeping their control. And it's just a question of, can IWM bulls regain the hourly trend, maintaining the daily uptrend? Or do we break 187.17 and shift this momentum? I'm pretty much just looking at this period of action as all very similar for bull control. And if we do not break 187.17, the character of this uptrend does not change. And so with that IWM weakness, PLTR is a growth name that had a lot more bear follow through after earnings yesterday. CRWD, still fairly tight, not much weakness there. Snow, pullback on the daily. So overall growth pulling back today. TAN had a gap down open, but bulls were buying that gap down. Cannabis names definitely got crushed. We'll look at those in just a second. But biotech sector daily consolidation underway. We broke the low of yesterday first thing, which confirmed the hourly downtrend. Biotech sector was a top watch bearish from that public morning live stream, and then was looking for the 15-minute lower high once I ended the live stream. And we did have a nice little bear flag with a double top if you zoomed in. 91.56 was the high of that bounce. 91.51 was a double top, and then bears really took over from there. And then we had a big bounce. Unfortunately, that was during my lunch break because I was keeping an eye out for the bounce as well. And we ended up with the hourly RSI getting right down to 30, and that leading to a V-shaped bounce. So again, this sector and the volatility in both directions is just beautiful. From the close yesterday, we dropped 5%, which means LABD went up 15% in a half day of trading. And then from the low of the day, LABU bounced 7.5%. Just massive opportunity in both directions. And because of that massive volatility in both directions, I find myself being much more drawn to day trading versus swing trading, because to let a swing trade play out, you've got to sit through a bounce where your position drops 6%. And I really struggle to let my positions drop that much to let longer term moves play out. But we're going to be looking for a daily higher low to be the result of this pullback on the biotech sector. It's just a question of, can the bulls confirm the hourly trend change back in their favor? So on this current bounce, anything under 93.30 is just a lower high. Have to then confirm an hourly trend change. And I'm going to use the daily EMA 12 as my guide here as well. It is still a possible bull flag. So if we have a bullish CPI reaction, XBI is a possible bull flag here. So not going to forget that the daily chart is in complete control of the bulls still. This was just very overdue consolidation after such a big breakout over the last week. Cannabis names gave it all back. So they were a top watch for the bears as well, knowing that we were starting with broader market weakness and we were just looking for hourly lower highs on the morning. And so TLRY, just look at this bear control. From the morning, you got a 5-minute stair-step drop for the first half hour of the day and a pullback of about 10% from the high of the day. And CGC was not as weak. It's a daily inside bar, but very similar. And there was a top fishing play there, which again was one of the highlights on the morning live stream. If you can't break 328, there's a top fish there for the bears. We rejected by 4 pennies and then pulled back, 40 pennies? Less 35. So that's your ideal risk reward as a bear, but really nice top fish. And this sector is definitely remaining very weak. There was also some bearish earnings mixed in, which had a negative impact on the sector. Cron had a big drop today. Psychedelic names held up better than cannabis. CMPS is also trying for a daily bull flag. Bulls keep complete control as long as it's an EMA 12 support on the daily. Hourly, keeping an eye out for oversold conditions. If hourly oversold aligns with daily EMA 12, I might be interested in establishing a position where I look to play the hourly oversold bounce. I sell half of a day trade position to get down to a swing trade position size to then lower my break even on that swing trade position. So keeping an eye out for that possibility. And ATAI also pulling back today, but all things considered, fairly flat, which the bulls will take as a win. But ATAI is going to be up to earnings next week, which is going to determine whether this weekly trend change has follow through for bulls or whether the weekly trend change lacks follow through. And if it lacks follow through, that's going to be a potential monthly bear flag. So we'll see what the reaction is. Dollar. So I highlighted this morning how the dollar was not on Team Bear as far as the stock market is concerned. Bears stock market bears, crypto bears, commodity bears want to see 106.93. I did that same thing yesterday. 106.93 needs to break for the weekly higher low to be set. And so the dollar started this morning with some weakness. And granted, it bounced a bit, but got to get over that level to set the weekly higher low to increase probabilities that other things are going to set weekly lower highs. So keeping a close eye on that. The metals did see some strength, but got to be cautious of rising wedges. So gold broke the high with an inside bar bull break. But if we're red tomorrow in the metals, it all depends on the CPI reaction. But if we're red from the metals, if we're red from CPI tomorrow, these are rising wedges to be watching. This is the 4-hour time frame. And if these 4-hour rising wedges break bear, it'll increase the probabilities that we're topping out on the weekly bounce. But again, this is something that, if I'm a bull, I'm not overly concerned. I'm just putting on my bear glasses to ensure that I'm watching both sides of the equation and I'm not, just bull mode and completely ignoring one other side of the equation because I want things to go up. Just a pattern to be aware of if we're red tomorrow in the metals. And silver has one as well. Looks like I drew it twice, but you get the idea. Just keep an eye out if we're red tomorrow because the daily bull breaks going straight into consolidation will show us bulls are tiring a bit. Miners pulled back today. Got a bit of a bounce going as well. Pretty solid V-shaped bounce. But again, this bounce, we have a little uptrend and bulls need to maintain that because this is a weekly bear flag still. We definitely need another solid leg up on these miners to not be a bear flag. Much more likely that these miners are a bear flag than the metals. How can I say that? Let's look at our retracement size. Metals retracement is probably about 35% at this point. Not metals, miners. And if you look at gold's weekly retracement at this point, from the last weekly lower high, it is 60%. Very different. Oil, keeping an eye on a falling wedge because this daily bounce got going after a bear break with no follow through. Just a visual guide, and it's not to the point where I would be considering playing it bullish. I would want to see a bit more bull follow through, reject from resistance, and then have space to try and set up a daily trend change. And this is important to be keeping an eye on if you're watching the energy sector as well. Energy sector looking for the potential of a daily lower high, anything under 78.66. And essentially, that oil daily falling wedge is going to dictate, in my opinion, whether or not the energy sector is able to maintain monthly EMA 12 support, which would keep this long-term uptrend very healthy if we do keep that EMA 12. So that's going to be pretty important for the month of August, in my opinion, for the bigger picture energy and oil charts, because it's oil trying to bounce off that monthly EMA 12 as well. Essentially, it's a daily falling wedge trying to shape up at monthly EMA 12 support. Natural gas also has a falling wedge. Same thing. We broke support with zero follow through, so I keep an eye out for a wedge. So if this falling wedge were to break bull on the 4-hour time frame, we would potentially be shaping up a weekly higher low here as well. And we need a 4-hour trend change to confirm for the natural gas bulls as well. So I hope you had a good day. We'll see what CPI gives us tomorrow. I'll do a crypto live stream tomorrow to check in on things. Simple statement. If SPY holds 409.60, the bulls are in complete control still. We have to lose that level for weekly consolidation to be shaping up. Do good things. Thanks again. So I let this wild lettuce grow wild. This one's got to be 9 to 10 feet tall, just starting to flower. See, there's big spider webs up on it. I actually saw a couple black bears and their babies eating this wild lettuce, and I think it has psychoactive properties. But I found that interesting because I've never seen a black bear chowing down on leafy greens. The wisteria and hardy kiwi climbing
very fast. Planted them and they were that high. Already working our way up. By the time next year, this whole thing's gonna be covered. Hardy kiwis already up on the top. Very fast.